My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Let me ask you a question. Have you been in the real estate space for any time? Chances are you're dealing with, properties that are worth multiple hundreds of thousands of dollars, if not millions of dollars, if not multiple millions of dollars. There's a lot of zeros behind the numbers in this business. The question is, how much of that money are you keeping in your pocket? How much of that money is kind of going out into the ether and you're not quite sure about it? I know for a lot of us that get into real estate, numbers and accounting and financing are not our favorite things, but they are super, super important. And today, our special guest, zooming in from Southern California, knows all about this because Jay Caplan has tons of experience in banking and finance and in working with real estate investors to help them really dial in their money. So Jay, welcome to the show.
Thank you very much, and thank you for having me today.
My pleasure. So Jay, maybe give us a little snapshot of, without getting into the weeds too much, when it comes to working with real estate investors, what do you guys do and how do you help them the most?
Sure. So I think the biggest thing, I look at myself as an outsourced or fractional CFO for primarily real estate businesses all over the country, and I've been doing this a long time. I think the biggest thing, and like you said, generally speaking, I call it the business is 2 or 3 steps beyond or past where the accounting and the finance team is kept up, right? And so my term is getting all the data 24 hours current, building tools and dashboards for the operators and their investors to really know currently what's going on, whether that's an income producing property, a construction project, all of the various real estate classes. And probably the easiest way to describe this is my mantra is getting our clients 24 hours current with all their financial information and building them dashboards and tools for what's important for them to be able to run the business. Most of the small operators are reacting after the fact relative to the different situations that are coming up. I try to be proactive and plan for those things, right? I've seen operators, they do distributions and then they don't have money to do capital improvements and those types of things. And really, I call it planning and building out, whether that's weekly or monthly or yearly, based on what those steps are, and making sure the operators, are planning ahead, not just for the revenue, but also the expenses as well.
I guess maybe an interesting way to look at this might be, without revealing any names or anything like that, but can you tell us one of your favorite stories of working with a real estate operator where things were a complete disaster when you guys stepped in, and then what you were able to help them accomplish?
Yeah. So I'm not going to say the name, but, dealing with the group, and they had about 15 multifamily properties in different stages, and they had different property managers that were dealing with those assets. And most of the property management firms, really giving, I call it after the fact financial data to these operators. Yeah. And so really what I did there was take that from the different third-party systems, whether that's Yardi, Appfolio, those types of things, integrating that data in, and then also taking the bank in the current financial information that they have and being able to marry those two, so that, my client was not, call it reactionary to things that were going on, right? Property management firms, they're doing a good job and they're trying to do their day-to-day tasks. But again, most of that's reactionary, and the owner-operator was getting that data, call it sometimes 30 days in arrears, and not really knowing and understanding, what was going on, and being able to understand that not just for themselves and the principals of that group, but their investors and their lenders as well. And so really getting them from what I call reactionary stage to a proaction, being able to be proactive in what they were doing and how they were running their business.
What difference did it make to them?
So it gave them better visibility into what was going on. I was able to give them, better margins and things to understand where that was. Also being able to use, call it AI, and some of the predictive tools, for deferred maintenance, some of those types of things, so that we really had a better picture as to what those expense ratios were looking like, and be able to build out forecasts and budgets over a period of time, that we could really stand behind with real and accurate financial information.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. Okay, I'm going to ask you a question that's going to be absolutely sacrilegious to you, Jay.
Sure.
But, just kind of, I'm trying to put myself in a viewer or a listener's position. What's the difference between what you're talking about and what they think they may or may not be getting from their accountant and bookkeeper right now?
So this is a general statement. It's a good question. What I would say in most cases that I see, the existing team is 30 to 45 days in arrear. So these operators, even if they're just self-managing it, they don't know the curves in the road or the bends in the road ahead of time, because they're getting it in arrears, right? What I try to do is get them ahead of that, so that they're current with that, and there's no surprises as they're going through the life cycle of their real estate. And in more cases that I've seen, or most of the cases I've seen, they're at least 45 days in arrears. Understanding is not the right word. Getting the accurate financial information for them to be able to make these decisions.
Okay, so for your typical client, let's say not the really big guys with a huge team, but more the smaller operators where it's 1, 2, 3, 4 people. I don't know if you work with companies that small.
Yes.
Yeah. Okay, so for those kind of guys and gals, if they tend not to be super number type people, like some of those folks are really good at finding deals and negotiating deals and construction and stuff like that, but not super keen on the whole numbers, I can understand the importance of being up to speed with what's going on financially. What kind of a dashboard would you create for that kind of a person, so it's really useful for them and they're getting the information they need and not getting overwhelmed with too much data all at once?
Okay. So I would say with that, what I really try to do is customize that for them, right? I mean, most of these operations, some of the third-party property management systems have a rudimentary kind of accounting system. I tend to default to QuickBooks. So with QuickBooks, then I can build a dashboard, liquidity, deferred maintenance. I try to build out a chart of accounts with different things. I might have a loan loss reserve. I might have, if it's there's so many different types of real estate, right? I might have a reserve for tenant.
Let's say it's multifamily. Most people can get their head around that.
Yeah. So a multifamily. So I'll create kind of reserve accounts for those different pieces so that they know what's going on, whether it's deferred maintenance or, we need to rehab a particular unit when that's getting turned over. And, really understanding kind of where that's at. In many cases, these guys, they have loan covenants, they've got an investor, their family, friends kind of pass the hat. They make distributions and then they get frustrated because they got to spend $20,000, to rehab one of the units when they're turning that over, right? Yeah. So what I try to do is build those reserves and have that all available. Again, real estate's not like operating, a produce market that you have daily activities going on, but it's really important to stay on top of those things and not be in a reactionary type position. And the more that you can stay ahead of the curve, it just helps with that planning, right? If we know we've got a $20,000 bill here or there, we can plan for that, create those reserves and not do the distributions. And more often than not, it's kind of passed ahead amongst friends and family. And then you got an expense and then you got to go back and ask people to write checks. And then that creates problems. So I try to be proactive and build that into the plan and budget so there's no surprises there.
Very, very cool. So logistically, how does your company typically work as a fractional CFO, fractional financial guy with your clients? How does that usually?
Sure. So, I mean, we're great for what I call the startup to the small operations. Like you said, the big operations, they're going to have a team of 20 people internally doing all this. I call it, we're like a Swiss Army knife. If our clients wants to do certain things and doesn't want to do certain things, that's fine with us. So really what I try to do with our team, and we're up to 50 employees now.
Wow.
And I have kind of an onshore, offshore model. So we're able to really give very good low cost solutions to our clients. But I think the biggest thing for us is what I really try to do is build out what I call the daily, weekly, monthly expectations from our clients and really sit down and scope that out ahead of time. And again, those things can change. But if we can organize kind of 80% of those, daily, weekly, monthly tasks and whatever they're looking for, it makes our job much, much easier and we work better with our clients. Also with that, we've got some creative tax strategies and entities and depreciation, different things that we can really do that a lot of small operators, might not necessarily be aware of. Creating a management company on the side. If you're looking at your real estate, you're driving up and doing it, well, that's a deductible expense. And we can build that through our management company. If you're traveling to other locations and looking at, potential properties, that can run through your management company. So putting all those pieces together, and working closely with their CPA, we do all the day-to-day accounting and all that back office work. We don't sign off on the tax return. So we work with kind of the CPAs, really making sure we're staying on top of that stuff and really, maximizing this from an after-tax perspective. And I didn't ask the question, but, a lot of times, some of the investors don't really think about these things from an after-tax perspective.
Yeah.
And that's really, really valuable, based on looking at this. If you're able to take that depreciation, and then with the new tax code and being able to do some of those accelerated depreciation and cost segregation reports, I don't know if you ever get into that in these podcasts and with some of your clients, but, that depreciation in many cases was almost another 10% IRR to these investors or to the owners of these properties. It's a big advantage. I can't speak for Canada, but the United States, it's extremely valuable.
Well, it's never as good in Canada.
Right.
They're better at they're more aggressive at collecting taxes in some ways, it seems like.
Right.
Most of our listeners and viewers are in the States anyhow, so this is geared towards. Very, very cool, Jay. I get it. Like I really understand what you're talking about. I've faced those kind of frustrations myself in my business. Getting all the data after the fact is kind of too late, and that kind of thing, and going on a hope and a prayer kind of thing, and yeah, right. It's so much better.
And the big thing too, when you're doing, I call it construction, value add, rehab, those kinds of things, that's where you really, really need to stay on top of these things. And I see many people that just wing it. I'm not the right person to say, this is a $5 million construction project, but we really want to spend the time, get multiple bids, be able to lock that in, build a reserve, those types of things, so that, there's no surprises after the fact.
Yeah.
Right? And the more you do the planning, and I know people are eager to get to the finish line, but the more you spend planning and organizing up front, I found the success at the back end to be much higher probability.
Well, here's the thing, Jay. Most of us, and I'll include myself in this, suck at that stuff. And that's why we kind of need a guy like you who can come in with fresh eyes and a ton of experience to say, hey, you should really consider this, and this. And by the way, we can kind of take care of setting all that stuff up for you, tidying everything up, streamlining stuff. That's huge. That's a huge value. So
exactly. And my analogy with that, I know we were talking about this earlier, is, we're going 200 miles an hour on a Formula One track. And in many cases, the accountant, bookkeeper, finance team, they're on a tricycle trying to keep up. And again, that's a general statement, but I see that more often than not. And again, in some cases, if you're lucky, that doesn't matter. But if you're running tight margins, you're in a competitive market, and a $20,000 rehab for your apartment is taking you from positive cash flow to negative cash flow, those types of things are really, really...
I think it matters in good times. I think it especially matters in tight times, which a lot of syndicators, especially the multifamily space, are going through right now. So, yeah.
Right.
Very important.
And then, the other things we try to do is, plan 2 and 3 steps ahead, right? What's that tax implication look like? Sitting down with the CPA, this project's going to generate this type of tax. What I like to do then, whether that's local, state, or however you set up the LLCs as pass-through or C Corps, S Corps, those types of things, but really create a reserve for the tax, right? So there's no surprises after the fact.
Yeah.
So every month we sweep that into a reserve account. We can have interest and those kinds of things, right? So it's not at the end of the year, you throw a shoebox full of receipts and then you're praying that your tax bill is less than what you have
to the bank.
Right.
Yeah. No, I'm chuckling because unfortunately I've been in the situation.
Right. Yeah. And again, I see those situations more often than not. And, they're completely surprised by what that tax bill looks like. Now, in real estate, it's a little bit less than an operating business. But again, there's surprises with some of those things. Right. And, maximizing the tax code for the small and mid-sized operators, there's a lot of tools and tricks that, some of these guys may not have or be aware of.
Yeah, very, very well put. Jay, time flies when we're having fun. I know there are going to be people that want to connect with you and find out more. Where should they go?
Sure. So my name is Jay Caplan, Jaycaplan. My company is called Tuross Group, TUROSS group.com. We are based in California. We have clients all over the country and probably 25 states now. And then I'll just give my personal email address. It's Jay @turossgroup.com. And I'm more than happy to talk to any, real estate operator, investor, those types of things all over the country. And I think we could provide a lot of value and assistance for them.
Yeah, I think you could too. Jay, this has been fascinating. Thank you very much for being on the show.
Sure. I appreciate your time and thank you very much.
All right, everybody, take care and we will see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.